Market Technicals Morning Call video for Tuesday, May 28th. Hope everybody enjoyed their long Memorial Day weekend. And for the veterans, thank you very much for serving our country. We did have some nice sunny days. A little bit cold here on the East Coast, but nonetheless, we did get a couple of nice days. Okay, so let's get back right to the markets. We did get a little bit of a down day, a down week, actually, I should say. Actually, markets haven't had 3 consecutive down days in, I think it was over 100 days. So it was nice to see a little bit of volatility come in, and nice to see a little bit of selling coming in into the markets. But as you can see here, no damage, no technical damage here. For the week, we actually sold off about 1 to 1.25% in the major indices. Of course, some of the other sectors did get a little bit more of a sell-off. The home bill was 2.3%. Semiconductors down 1.9%. Then, of course, some of the gold and the precious metals had a nice rebound. GDX 4%, and then gold, the metals 1.98%. So interesting. It was really interesting to see. And on Friday, markets were down, actually recovered, and actually really had a fierce short covering rally at the end of the day and into the extended hours that I've seen on the charts. So pretty interesting stuff. We're actually up pretty good today, this morning in the pre-market. We were down at one point on Monday. Now remember, markets were closed here in the U.S. and in the U.K. So it was really little price action here. Really nothing to write home about over the weekend and into Sunday, into Monday in the currency markets as well. Very quiet. But then you had a little bit of a turnaround when everybody started getting back online. Pretty much late last night and into early morning hours here, markets started really started getting heat up. So now we're up about 11 handles in the S&P, and we did get that reversal that we were looking for. And again, that partly due to Ben Bernanke speaking. So where do we go from here? Where do we think the markets are headed? Well, first of all, I would probably say, despite even the markets up, I would have said that I think the markets are going to test another move higher before really convincingly moving lower. So and why? And you can see here, and let me get the NYMO. We are in oversold territory, and this is usually the area 40-50 of where we usually bounce, right? Here, and all of these areas here, we at least had a little bit of a bounce before we actually flushed lower. And that's what I think that's probably what is going to happen this morning, and at least the indication of the S&P E-mini in the pre-market is going to tell us that. So we probably will get our bounce, and then we really need to see where we go from here the next coming days. This is a shortened week again. Remember, there's a lot of guys that still take off today and tomorrow, and then come in for the rest of the week. So there might be a little bit of slow time, but when there is a dull market and it's slow, you usually get a reprieve to the upside. Especially we've been down for 3 days, and we did get that short covering rally on Friday. So if we're looking to trade for today, my guess is probably going to look to be buying some pullbacks here. And in the longer term, and we'll go over that in a moment, but the longer term picture is quite well. The markets look pretty healthy here. And let me just show you some indicators. A lot of the indicators are still reading overboard, and here's the bullish percent S&P, way up in his 89 percentile here. As you can see, we're way overboard. Did get a pullback, but the bullish percent S&P really didn't budge at all. Here's the NASI weekly. I'm still on a buy signal, as you can see. So we've been on a buy signal for the last 4 weeks. And here's that 5 weeks, actually. We're right in this area here. You can't really tell. But if you look in this corner, 655, that's the 5th week. Really didn't move much, but still on a buy signal. And if we look at the New York Stock Exchange Summation Index, we just open that up. You can see here, we are still on a buy signal. We haven't crossed the red, although it tried to. Weaker. The New York Stock Exchange Summation Index is weaker than the NASI. But nonetheless, we are still on buy signals here, okay? The one thing that I do want to talk about is copper continues to lag. Again, the market hasn't given much back of divergence at all. And when you do find divergence, we usually get some sort of a retracement, or at least the market tends to go that way. We haven't really had that. Divergence have been negated a lot of the times that we've seen red flags for at least the beginning of this year. The markets have really just ignored divergence and continued to track higher. So copper is still diverging, is weaker than the rest of the indices, and copper is definitely a leader, but hasn't been leading at all. So either the markets are going to sell off or copper's going to start to rally. And more than likely, my guess is that with the markets the way they are, I think copper will probably rally and follow and catch up and play catch up to the equity markets. And then, of course, if it does rally, then it's just going to help equities. Okay, here is the VIX, and we did get a black candle, which was usually a sign of a reversal, and that puts a bid into equities. As we know, it's inversely correlated, and we did get a red candle here on Friday, and that meaning that was that short covering rally towards the end of the day. They started dumping the VIX and started buying stocks back. So again, this doesn't surprise me that the markets are up today. But again, it was nice and refreshing to see some volatility come in from the 12 all the way up to as high as 15. Caught that 200-day moving average on a daily chart here. So we'll just have to see if this pullback in the VIX is just a pullback, and then really the markets start to heat up again. But again, guys, if Bernanke's talking about reducing its asset purchase program by June, and the markets really don't care, I mean, that's pretty amazing stuff that nobody wants to take a profit here or lock in some gains, especially. My guess is that they're probably thinking that's not going to happen. Most of the people that are along the market are probably saying, nah, it's not going to happen, not going to happen. So they're really not believing on what Ben Bernanke says. And we'll have to see what happens come the next meeting in June. Okay, now interesting here is what I want to show you is the 30-year. Take a look at this 30-year bonds. Now, bonds are, as you know, are the smartest market out there. And if this is true, this is the head and shoulders pattern here, and this is a weekly bar chart of 30-year bonds. As you can see, Treasuries, 30-year Treasury bond price index, end of day. We have a slanted neckline. If we break out here, now we could bounce again and then test this area and then fail. But if we break this head and shoulders pattern, then I think you're going to have a huge rally in equities. So keep an eye on what the bonds are doing, what the bond market's doing. Here's a 30-year, guys. If this breaks the neckline and then back tests and then fails and we start to really go lower, this is going to put a huge bid into equities. So just keep that in mind, okay, going forward. All right, now let's take a look at our charts. Not really much to tell you, but you can see here, I just want to show you no technical damage whatsoever. We did break the 8. We caught the 20 in the S&P cash. And now we're just sitting above this long-term uptrend line, very bullish, okay? And we put in a bottoming tail here, and we closed green, very bullish. So it's all I can say. Can't be a bear here as of yet, and as much as I'd like to, we trade what the markets tell us, and we trade what the charts say. And this is, again, holding above the 20-day moving average. Broke the 8, but held above the 20, so this is still bullish here. If we start taking out 165.70, that's what I want to look for today. 165.70, I'll be looking to buy pullbacks here. And look for any stocks that have been hurt in the last couple of days that really have held up the best. That's what you want to buy today. And that's what I'm going to be looking for today. And here's the 30-minute spiders. As you can see here, we rolled over on Wednesday. Thursday, we took a gap lower, but we actually grinded higher the rest of Thursday, and then we gap lower on Friday, and we grinded higher again, closed at the highs into Friday and in the after hours. So, again, guys, take a look at this. This is not bearish at all. This is quite bullish. We are still in the 200-period moving average here. Held it nicely on the 30-minute, and now we're starting to consolidate here. So we should break out if the S&P holds the 11-handle gain. We should really break out breaking out and taking out the high from Thursday. So Friday's high really is what I'm likely to see and hold. If we start taking that out, next pullback, we should be looking to buy stocks. And here is the diamonds. As you can see, held the 20 and the diamonds. This is one of our followers, but actually holding up pretty well here as in the diamonds in the Dow Jones. Transport's our leader, as you can see here. Back tested it nicely, held the 20-day. Again, no technical damage. If anything, we're still reading overbought here. So that's telling me that we got some room to run. Or if the markets chop around, it's going to unwind that overbought reading, and then it's going to propel higher again. So I wouldn't just yet be looking to short this market. Here's the IWMs, which is the Russell 2000 ETF. Again, holding a 20. We're back into this channel, right? We're in this channel, but we held the 20, and we are holding the long-term uptrend line as well. So again, nothing wrong with this at all. Here's Goldman Sachs. Wanted to show you Goldman here. Had a fierce rally off of his bull flag. Nice. Now we're back testing the 20. Didn't even get close to the 20, and look what happened. They just retook Goldman up, and Goldman closed positive. So, guys, banks are doing really well here. I would have liked to see a little weakness, short the banks, and then actually get long them again, but not with Goldman being here, one of our leaders in Goldman. And you can see the ETF and the XLF here held nicely this longer term trend line. And let me just get that right there. Back tested that trend line, and we held the 20-day moving average. So again, nothing wrong with the XLF as well. Here's Apple. Now, Apple's been doing quite well here. It's been holding its gains, holding the upper end of the 418. Remember, that's going to be your line in the sand, 418. We need to really take out this area here, 470. If we take out 470, I think you take a beeline shot to the 500, 510 area. So the weekly chart looks fine, as long as we stay above 418. Here's the daily chart. That inverted head and shoulders measured to 555. So if we start to take out this area here, now again, 470 is going to be, that's going to be the inverted head and shoulders neckline of 470. If we take 470 out, then we're going to have a really, really clean shot to the 500, the 500, and even the target area of 555. It's going to have to overcome this 530 area. And remember, the 200-day moving average is going to start moving down as the days go on. So that's going to be your first obstacle. A break above 500 will be the test of the 200-day moving average. Okay? And then lastly is the Qs. Weekly shot of the Qs. Again, nothing wrong with it at all. Riding that upper Bollinger Band. Back tested this uptrend line of this, basically of this wedge. Held it to the penny, and now we just got a red candle here. So inside week from the previous week. We'll see what happens this week if we start to break out again. And then again, the Qs daily held the 20-day moving average. So in a nutshell, all of the indexes held the 20-day moving average. We're still reading overbought. Still looking for a decent pullback. Today, the markets are up 11 handles in the pre-market. And if we hold and we take out that area in the spiders I mentioned, then we should be looking to buy pullbacks. And that would be basically it for this pullback. Now, again, when we get closer to the median of FOMC, we'll see if Bernanke's for real. If he starts to really tighten the reins a little bit in his asset purchase program, then I think you're going to have a meaningful sell-off. But until then, I think markets are just kind of throwing it to the side, saying, he's not going to do that. He's going to continue to buy bonds. And remember, watch the bond market every day. This is going to be interesting to see if bonds really break down from that head and shoulders pattern. That's going to fuel buying in equities. Remember that, okay? Keep that in mind. Have a great day, everybody. Looking forward to get back to the markets, and we'll talk to you tomorrow. Take care.